Find the hidden gems of the 2025 stock market before Wall Street catches on? With markets bouncing from one headline to the next, rate cuts, AI booms, and tech slowdowns, smart investors are scanning the rubble for stocks trading below what they're really worth. And that's exactly what we're breaking down in this video. Undervalued stocks aren't just cheap, they're mispriced. These are companies with real earnings, real futures, but temporary headwinds or market overreactions keeping their prices low. While the crowd chases hype, these picks could quietly deliver serious long-term returns. So if you're looking for value in a noisy market, this list is for you. Criteria for selection. When we say undervalued, we're not talking about penny stocks or speculative plays. We used 4 key metrics: price to earnings, PE ratio, price to book, PB, PEG ratio, and forward earnings projections. But numbers alone aren't enough. Each company on this list also has solid fundamentals, reliable cash flow, and short-term issues we believe are temporary. Some are legacy names hit by market rotation, while others are modern disruptors whose growth slowed post-pandemic. We intentionally mixed sectors, tech, health, entertainment, and industrials, to give you both diversification and opportunity. Think of this list as a radar, not a guarantee. But every name here offers a chance to buy quality for less than it's worth, based on current May 2025 data. The key is patience, discipline, and knowing where to look. Stock number 10, PayPal Holdings, PYPL. PayPal is trading with a PE ratio under 20, something we haven't seen in nearly a decade. Despite market skepticism around fintech, PayPal has aggressively cut costs, improved its user interface, and expanded partnerships. Venmo continues to grow, especially with Gen Z users and small business adoption. The stock is hovering near its 5-year lows, but its fundamentals remain strong. Over $4 billion in free cash flow, global reach, and a resilient balance sheet. With digital payments here to stay and PayPal reshaping itself for the future, 2025 could be the year this fintech giant surprises Wall Street. Stock number 9, Alibaba Group, BABA. Alibaba is the poster child for misunderstood opportunity. Its stock remains deeply discounted due to ongoing geopolitical tensions and regulatory crackdowns in China. But the business tells a different story. Cloud services are rebounding sharply in 2025, and consumer demand is stabilizing. At just 8x forward earnings, the valuation is absurdly low for a tech titan with global infrastructure and high cash reserves. The market seems to be overpricing fear and underpricing fundamentals. If you can stomach the political noise, BABA may be one of the best bargains in global tech this year. Stock number 8, Warner Bros. Discovery, WBD. After the rocky merger and early losses, Warner Bros. Discovery is finally finding its footing. Its streaming platform Max is turning profitable, boosted by smart bundling and original content wins. The studio side remains strong with theatrical and franchise-driven content. WBD also continues to aggressively pay down its debt, stabilizing its balance sheet. Despite these positive moves, the stock is still trading at a major discount, far below media peers like Netflix and Disney. For investors willing to look past the 2023 chaos, 2025 could mark the beginning of a long-term turnaround. Stock number 7, Ford Motor Company. Ford might not be the flashiest EV play, but it's one of the most undervalued. As of May 2025, it's offering a 5% dividend yield and trading at a low multiple, despite steadily growing its EV sales and investing in battery technology. While Tesla grabs headlines, Ford is quietly rolling out affordable EVs and scaling its production capacity. It also benefits from its traditional vehicle lines, which still bring in massive cash. Investors seem to be ignoring its long-term strategy, but once the market sees Ford as a hybrid of legacy strength and EV ambition, the upside could be substantial. Stock number 6, Mercado Libre, MELE. Often dubbed the Amazon of Latin America, Mercado Libre dominates the e-commerce and digital payment space across Brazil, Argentina, and Mexico. Post-pandemic, growth slowed as the region stabilized, but in 2025, MELE's logistics network and fintech arm, Mercado Pago, are booming again. The company continues to invest heavily in infrastructure and same-day delivery, a rarity in its markets. With less competition and a growing middle class across LATAM, MELE is uniquely positioned for long-term growth. Despite all this, it still trades below its historical valuation metrics, making now a strategic entry point for investors eyeing global e-commerce exposure. Stock number 5. Intel, INTC. While Nvidia and AMD ride the AI wave, Intel has quietly been rebuilding. The company's chip foundry services, part of its IDM 2.0 strategy, are gaining traction, especially as governments seek to localize semiconductor production. As of May 2025, Intel trades at a PE ratio below 14, which is incredibly low given its renewed relevance in AI server chips and data centers. It's also investing billions in US and European fabs, which could become crucial in the global chip supply chain. Investors have largely ignored the comeback narrative, but Intel might just be the biggest underdog in the semiconductor race. Stock number 4. Walt Disney Company, DIS. Walt Disney is going through a major transformation in 2025. Following another round of leadership changes, including Bob Iger's transition plan and a strategic ESPN spinoff, Disney is refocusing on content, parks, and profitability. Its theme parks are rebounding post-COVID with record attendance and price increases, while streaming losses are narrowing. Yet the stock still trades below its 10-year historical average, partly due to media sector fatigue. With massive brand equity, diversified revenue, and a clearer roadmap, Disney might be the comeback story of the decade for long-term value investors. Stock number 3, CVS Health, CVS. CVS had a rough 2024, shuttering underperforming stores and absorbing hits from its acquisitions and healthcare expansion. But with the hard reset behind it, CVS now sits on a strong balance sheet and a high-growth opportunity in value-based care. The U.S. population is aging, prescriptions are up, and in-home care is gaining ground. CVS is integrating primary care, pharmacy, and insurance services under one umbrella. As of May 2025, the stock remains beaten down, making this a potential bargain for investors looking for stability and healthcare exposure with real upside as the sector evolves. Stock number 2, Shopify, Shop. Shopify's meteoric rise during the pandemic came with a brutal correction, but that was the reset it needed. In 2025, Shopify is leaner, more profitable, and expanding beyond simple storefronts. New AI tools help merchants personalize shopping experiences and automate back-end operations. With e-commerce surging again, especially in mobile-first regions, Shopify is once again the backbone of small and mid-sized online businesses. Its valuation has cooled significantly from its 2021 highs, creating a window for long-term investors who believe in the future of independent retail. It's no longer a hype stock, it's a real business with real traction. Stock number 1, Taiwan Semiconductor Manufacturing Company, TSMC. TSMC is the silent force behind the global tech industry, producing chips for Apple, Nvidia, AMD, and more. The 2024 AI explosion drove unprecedented demand, and TSMC is now scaling up 3nm and 2nm chip production. Despite this, its stock remains undervalued, largely due to geopolitical tensions with China, but much of that risk is already baked into the price. With governments investing in chip security and manufacturing partnerships, TSMC stands as a linchpin in the world's technological future. For investors who can handle the noise, this may be the most solid long-term semiconductor bet available. Undervalued doesn't mean weak, just undiscovered. Which stock from today's list do you think has the most potential? Let us know in the comments. And if you found value in this video, hit like, smash that subscribe button, and turn on notifications for weekly picks and insights.